afternoon, everyone, and happy Friday. Welcome to Stock Market Today. It's Alyssa Corum and Ed Carson here to break down the action that we saw today and this week. So, Ed, if you could kick us off and pull up, let's take a look at the major indexes. The S&P hitting a new high, so we're extending our win streak here.
Yeah, this is third straight weekly gain. Nice close. I mean, we had nice close in the major indexes. In the last few minutes, had a flurry of gains. Not a whole lot of power in the S&P this week, but somehow a 0.3 or 0.4% weekly gain is enough to get the S&P to a record high, and we'll take it. Saw some more strength in the Nasdaq, but I think most importantly, the leading stocks are doing well. So that's I think that's what that's ultimately what investors are going to be worried about. Can you find stuff to buy, and are those stocks working?
Mm-hmm. Exactly. And it's just, in addition to the overall market health, what's going on underneath the surface, equally important. And we'll get to that in a minute and take a look at a couple names that might provide some clues as to what's going on in the market. And Ed, you mentioned the strength in the Nasdaq. We'll get to that as well. But first, let's take a look at the S&P on the weekly. You mentioned the third straight weekly gain for the S&P 500, and we'll just go ahead and zoom in there. We got the regression channel lines, and it looks like a pretty healthy market right now.
Yeah, and just sort of steady up. We're closing near the highs. So there weren't much of gains. We ended up at the high point. It's just been really tight action for the S&P. Even here where we had some swings, we generally the action was positive, finding support where you'd like it to. We're sort of staying in this sort of area between right in the middle of this, regression line, or between the standard half deviation. It's all working out very well right now.
Mm-hmm. And now we're going to take a look at MarketSmith so we can analyze the NASDAQ. And you mentioned the NASDAQ gaining again on Friday. There's a look at the Qs there. So large cap tech looking good, and the NASDAQ composite above that 14,000 level and extending its gain, albeit just a little bit on Friday. But good to see that at least for now, we're not hitting resistance at that round number.
Yeah, it's sort of perking up. And while the S&P hasn't been, while the S&P has been rather slow, it was a pretty decent gain for the NASDAQ here. I mean, it was, and this is not with the final number, so it was probably closer to 2%. Nice gain. We've had some nice action in that regard. So, it's sort of broad-based. A few weeks ago, even just a week and a half ago, there was like some moments here where the NASDAQ was like, boy, oh boy, we're underneath the 50-day line. We're in trouble. But ever since then, things have picked up. And, really, when the market's at your back, it just makes it so much easier to be successful in the market.
It does. And let's also look at the Dow, not really standing out as much as what we're seeing in the S&P and in the NASDAQ, but it's still holding up right around that 21-day line, still a good amount above that 50-day too.
Yeah, it's doing nothing wrong. It's consolidating. Some of the financials, some industrials are struggling a bit, but overall, this is still doing fine.
And look at small caps. Got to do that to get a full look at what's happened in the market this week. Small caps finishing up Friday with a pretty strong gain. And for the week, up almost 2%. So continuing to move higher here. So strength in small caps, in technology. And do you think that signals a continued broadening of the market strength, or more of a rotation?
It does. Well, there is some of it is rotation, because home builders sort of had a really strong decline. There were some industrials, and we'll get to one of them later on, that had a rough week. And financials, with treasury yields coming down so much, financials are struggling, but generally the market still seems to be broad. There's a lot of technology stocks that are doing well. Medical's coming on from a variety of sectors, a variety of groups in medical, but there's also things like miners and metals were doing fine too. So it is a broad rally. You still have to be on your toes and be aware of how things are, that sectors may come in and out of favor. But look, when the major indexes are all moving up, the rotation's a lot easier to deal with. Let's just put it that way. It's much more of a positive spin.
Well, one area where we're seeing notable rotation into is the software sector, and CrowdStrike in the security software industry group now at 97 out of 197 in terms of industry group rank. A big gain for the week, up 1.2% on Friday, following up strong gain Thursday, almost 12% on the weekend, and the move came in above average turnover. So an actionable opportunity in the software space, which we haven't really seen in a while, or at least seen an actual opportunity that's worked for a while in this area.
Not too many, and this has come back. There was definitely some neat support here, like on Monday, it found support at the 50-day line. So that was an important day. It really wasn't necessarily a place to buy it yet, but that was a really nice support day. And then on Thursday, it sort of an early entry here. There's this might have been too low, but this area here was certainly an early entry right at this 227 level. Something David Ryan likes to say, buy and draw the line, or you could pretty easily draw the line right across 227. So nice breakout and heavy volume, then following on with a decent gain today, still actionable for sure. I mean, when software, this was one of the hottest areas in 2019, 2020. Doesn't mean it's going to be one in 2021, but there's reasons for it. I mean, there's tremendous growth for this company. I mean, when you're slowing down and it's 70% revenue growth, that's not too bad.
Yeah, not too shabby at all. And Fortinet, FT&T, a great example of leadership in the group, really stands out, I think, in its performance this year, and hasn't really offered all too many buying opportunities along the way. It did pull back in March and rebound off of that level, so extended right now, but group peer CrowdStrike with an actionable opportunity this week. And let's also take a look at long-term leader MSCI and check in on the action there. Rebounding off of its 50-day line on the daily chart, 10-week line on the weekly chart, and a strong move Thursday that it was also able to follow up on today. So an actionable stock in the financial services group.
Yeah, and this one isn't so focused on interest rates, which is why it's been able to hold up a little better. There's accelerating growth on revenue. It's not the blistering pace, but it's been 4 quarters of revenue growth picking up. Technically, as you say, the 50-day line, there's also, you could argue, a trend line here, even the short-term level across here. And for a long-term, this is an early entry for a position trade, like if you want to start a position or get into it here before the official buy point. But for a long-term leader, this can be a good place to go, because they often can go, have a little stair-stepper mentality at times. And so buying it off the 50-day or 10-week can sometimes be a better way to go.
It definitely can. And now let's just take a look at the monthly chart really quickly to show its long-term leadership qualities. You can see that relative strength line pointing higher, underscoring that long-term market outperformance. And then we also have that steady earnings growth and stability of the growth as well for MSCI, which we can see right there on the weekly chart, a 5-year EPS growth rate of 27%, quite impressive, and very stable growth at that. So MSCI not too far above that 10-week line, and an actionable opportunity there. But on the downside, we do want to comment an action of a sell this week for one of the notable movers we've seen in 2021, and that is Caterpillar, going on a really strong run since last September, October, breaking out of a consolidation. 2021 has been quite an exceptional year for Caterpillar, but a definitive sell signal, Ed, coming this week with the stock losing almost 10% in heavy volume and closing well below its 10-week line, the first significant breach of that level in this run-up.
Yeah, we talk about a decisive break is when you fall 2% below the 10-week at the end of the week, and there's no other, near-term support by any definition. I mean, this was huge volume, huge decline for a stock. This is not like a wild IPO. A 9.5% drop on essentially no news is really painful for Caterpillar. Breaking through, it ended down 6% below its 10-week line. As you say, it's a real character change. I mean, for anybody who bought here, you definitely had to get out because you lost a decent gain, perhaps, and then definitely down more than 7 to 8%. But even if you bought it further back, like here or in here, this kind of character change is like, well, that's really telling you something when they have that kind of negative action, to be thinking about getting out of the stock like that, because maybe that run is over. It doesn't mean, it might bounce back, but that's just not a very good sign.
Right. Our research shows that more often than not, when you see this kind of move, it signals that the stock at the very least needs to take some time to form a new base. So that could be the case. But even if it is, why would you want to sit through that? We don't know how long, if it is going to build a base, how long that process is going to take. Or as you said, the run just might be over. So your money is most likely better off elsewhere. So our investors, by and large, if you're rotating out of a caterpillar, and we're seeing more strength in technology, software stocks, chip makers have also been standing out. Do you think that this rotation could start trickling over into other hot recovery groups that we've seen outperforming so far in 2021, or is it still too early to tell?
It's too early to tell because, the steel stocks did quite well this week. I mean, there was not any kind of thing, and some of the miners are setting up nicely. I mean, some of that's just all due to pricing on that front. So those are doing well. And, you don't want to get too exposed maybe into technologies, because there's been a tailwind of the lower treasury yields, and you just don't know if the sector rotation will change. Once again, I mean, I think technology is doing well. That's why we showed CrowdStrike, as you say, chips are doing well. There's a lot of reasons to be in some of these names, but just know that this may not be fixed. The rotation may not be done. And but definitely some nice stocks to be looking at. But yeah, Caterpillar, not one of those.
And Ed, you have some words of wisdom for investors as they do their weekend homework and prepare for the week ahead. When it comes to picking the right stocks, no one's going to have a perfect batting average. You're going to have some trades that are not going to work out in your favor. And then it comes down to properly managing your portfolio at that point to make sure that your winners are what's shining and not the losers.
That's right. I mean, it's like, and this is not, I've taken off the chart so I can look at myself, in this thing, so I can talk to myself. You guys, you don't have to listen. No, really, if you want to be a big winner in the stock market, you need to become a small loser. I mean, that's really it. Hopefully in a good market, you're going to win more times than you lose. But the real key is making the winners be hopefully bigger ones, or at least some of them be really big. I mean, it's okay to have a bunch of modest ones, but if you have your losses really small and don't let them blow up, I mean, there's always going to be that time when the stock falls 30%. But, when the stock falls 70%, get out, and then move on, and that's the way to go. There's some incredibly skilled and experienced people like who are on. David Ryan is on almost every week. Mark Minervini, all these people we've had on, they'll tell you the same thing. I mean, they have every reason to think that they're smarter than everyone else, but they're not smarter than the market, and that's one reason why they're so great. And just because they know that, that's how you do it. You turn all those wins, and then you don't let it get subtracted away.
And yeah, I feel like something that's really helpful with that is making sure that you aren't buying extended, because that really does leave you more vulnerable to a pullback. But if you're already down 7 to 8% and that stock isn't even close to its 10-week line yet and ends up finding support there, then it's just that trade is a little bit out of balance. So focusing on making sure that you're not getting too excited with all of the strength that we're seeing in these new areas, and not staying as disciplined with buying at the right spots too, because I feel like that also trickles over to the selling side as well.
I think you're right. And it's also, if you buy extended and it goes down, it's not really at a bad spot. You haven't learned anything. I mean, because the stocks often pull back. I mean, but if you buy near the buy point and it sort of goes down, something's wrong. I mean, it's not just that your trades, it's like, so, yeah. Buying at the right spot can really help you. It's like, that's right, this isn't working. This isn't working. Not just it's not working for me, but it's not working for anyone. Mm-hmm. And I think that can be helpful to know to get out. So just keep those losses small, and then you can become a big winner.
Yes. And while things are looking pretty good, we don't know what's going to happen next. Ultimately, we don't have a crystal ball. We can look at history as our guide and analyze the market technicals, look at the underlying health of the various groups, but we could see a change at any moment. And so we never want to get complacent.
That's right. You don't want to be locked in. Yeah, things look pretty good, but if the Nasdaq and the S&P fall 2% on Monday, we'll change our mind about how things are. I mean, and just so you have to pay attention and be flexible, and that's just part of, if you're putting all this money into the market, you got to be paying attention.
That's right. And you're so true, Ed. We're saying this just as much for ourselves as for the audience. But anyway, thanks so much for watching, everyone. Another interesting week of trade. We'll be back more next week. So make sure you tune in at IBD Live, investors.com/IBD Live in the morning, and follow our coverage on investors.com throughout the day and over the weekend so you can prepare for the week ahead. Thanks for watching. We'll see you then.